Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Hurricane Milton makes landfall on Florida's west coast, bringing life-threatening storm surges and leaving millions without power. We will bring you the latest throughout the show. Asian equities rally following Wall Street's fresh record high. US inflation data out later, set to define Fed policy in the coming months. Plus, split on rates. San Francisco Fed President Mary Daly expects one or two more 25 basis point cuts this year. That's after Fed minutes reveal Jerome Powell faced some pushback on last month's jumbo cut. European futures pointing higher by 0.1% this Thursday morning after the record gains on Wall Street. The S&P notching a 44th record of the year. Yes, our focus shifts to the inflation print, the CPI print out of the US later. Arguably, though, less important potentially than it has been in previous months, given that we know that FOMC officials now are leaning a little bit more to the labour market in terms of how they weigh up their further response. We continue, of course, to pass the minutes and see how that reflects in terms of the pricing. Markets now pricing in fewer than two cuts by the end of the year from the Fed. The FTSE 100 futures pointing to gains of 0.4%. S&P futures after that record currently flat. Nasdaq futures after some strength that came through from some of the tech names in the US on Wall Street, currently holding above that 20,000 level, but flat in terms of the futures as we lead up to the open later in the US. Let's flip the board and look cross-asset then. We look at a 10-year with a yield of around 4%. The dollar has been strong, 407 right now on the benchmark 10-year. Euro dollar at 109. Brent, $77 a barrel, up 0.8%. We continue, of course, to keep an eye on the Middle East in terms of the conflict there, but we know the inventories has been building out in the US as well. Gold, 2,614. The yellow metal up 0.3%. Now, Hurricane Milton has made landfall in Florida as a Category 3 storm with warnings of extreme winds and a potentially life-threatening storm surge. Bloomberg's weather reporter, Mary Quay, has been following the story and joins us with the latest. Mary. The latest as we watch this landfall of Hurricane Milton in Florida. What are we seeing on the ground in Florida? I think we may have lost the connection to Mary. It happens. It's live TV. We'll try and get that line re-established with Mary to get the latest in terms of what could be a devastating storm, of course, in Florida, with millions, around 6 million people being told that they should evacuate. And, of course, the costs in terms of the insurance cost potentially running all the way up above $100 billion on some estimates. That is a major story for us today, and we will bring you the latest, of course, when we re-establish that line. Let's get back to what's happening across these markets then. It's been another pretty volatile day in terms of the session over in mainland China. Some strength coming through after the CSI 300 saw some significant selling pressure, the biggest downside for that benchmark gauge yesterday in about 4 years. Let's cross over. Avril Hong standing by for us in Hong Kong, in Singapore, I should say. Avril, give us the update in terms of how those Asian markets are faring today.
Yeah, Tom, to your point, we have been seeing these big swings in Chinese equities for much of today, but they are, for now, leading the gains in the Asia Pacific, which in themselves are in a pretty good mood if you take Asia ex-China, thanks to the S&P 500 clocking the 44th record this year. So stocks in Japan are also doing pretty well, but where the action, as you say, really is in China, where yesterday we saw the CSI 300 was showing in 4 years. It's staging a bit of that comeback today on the Hang Seng, gains of almost 5% as well. And this is looking ahead to Saturday's briefing from the Chinese finance minister, where hopefully he fills in the blanks as far as fiscal stimulus is concerned. But what was also really interesting is as Hong Kong heads into a long weekend, the timing of a PBOC announcement that the eligible investors can now start applying for that $71+ billion liquidity tool for stock market investors, something that the governor, Pang Gongsheng, had indeed announced last month. So that is what we're seeing in terms of sentiment boosters for Chinese equities. The pessimist in me is thinking back to afternoon session of yesterday, though. Think how quickly that stimulus speculation turned into stimulus skepticism. So something to keep in mind, even as we watch these Chinese equity markets. The yen also in focus. Dollar-yen's move towards 150 might be turbocharged depending on what we get out of the US CPI print. Let's flip the board and take a look at other currencies, namely the Chinese yuan. Offshore, onshore, they've both been gaining today, not just equities that have been catching a bid, but also wanted to highlight what we're seeing in China's 10-year yield moving closer to the 2.18 level. Chinese bonds have been gaining. And if you take a look at this next chart, it is a really interesting dynamic that Mary Nicola has been pointing out on the MLive blog. Amid the volatility, if we flip the board in Chinese stocks, we've actually been seeing Chinese bonds gaining ground, catching a bid. And regardless of what we get out of the Chinese finance minister this Saturday, she thinks we could still see Chinese bonds gain ground, because if you think about the structural issues that need to be fixed in China, the high local government debt, as well as deepening property market slump, these are things that need the help of looser monetary policy, a good environment for Chinese bonds. So something to consider even as we see the Chinese equity volatility today. Tom.
Okay, Ava Hong with a fantastic breakdown of what is transpiring across these Chinese markets. Joining us out of Singapore as we lead up, of course, to that finance ministry briefing on Saturday. And, of course, a risk factor for these equity markets is whether or not they under-deliver. But, of course, we'll get the details Saturday out of China. Let's get back to the situation on the ground in Florida. Hurricane Milton has made landfall in that state as a Category 3 storm with warnings of extreme winds and a potentially life-threatening storm surge. Bloomberg's weather reporter Mary Hui is following the story for us. We've re-established that line. Mary, what is going on right now in Florida? What is the latest?
Hurricane Milton is continuing to move across the central part of the Florida peninsula. It has now notched down to a Category 2. Previously, it was a Category 3 when it made landfall. As it was approaching Florida earlier, it was a Category 5. So it really has fluctuated a lot in intensity. But what hasn't changed is that it will bring, and it is bringing, destructive winds, damaging waves from the storm surge across large parts of the Florida coast, and also extreme rains, which will trigger flooding, flash flooding, and urban flooding. So we're seeing all of that play out right now as it continues to maintain hurricane intensity through Thursday, as it's projected to move across the peninsula and then eventually out through the east coast.
Mary, what is the latest in terms of expectations and estimates of the potential damage of this hurricane when it comes to the infrastructure and the housing stock of Florida?
The fact that it has hit the Tampa Bay area, where there is low topography, means that the damage from the storm surge will be significant. We're also seeing on the power infrastructure side of things, over 2 million customers in Florida now without electricity. In St. Petersburg, there was a mains break, and so that city has cut potable water service. So across Florida, along the storm track, we're seeing widespread damage as it's playing out, and so that's definitely something to keep an eye on as the storm continues to move.
OK. Bloomberg's Mary Hui with a really important update in terms of the damage coming through from Hurricane Milton as it hits Florida. We'll keep across that story, of course, for you throughout this morning. Now, minutes from the FOMC September meeting reveal that Fed Chair Jerome Powell received some pushback on that half-point rate cut. San Francisco Fed President Mary Daly described the move as a recalibration.
What we saw in the last several months, really since after the first 2 months of this year, is that the labor market has downshifted. It's now at a sustainable pace of growth. We are just where I believe we need to be at full employment, not growing too fast, not growing too slow. And I am now quite confident that inflation is on path to hit our 2% goal. I think that 2 more cuts this year or 1 more cut this year really spans the range of what is likely, in my mind, given my projection for the economy. But it's really important to put caveats with that.
OK, Mary Daly speaking there. Let's bring in Bloomberg's Valerie Teitel right now. We had the Fed speakers then. We had the Fed minutes, I should say, Mary. And we did get an indication there was some pushback. There was only one, of course, FOMC member, Michelle Bowman, who actually officially opposed that 50 basis point cut. But the debate was live. What did we learn from those minutes?
The debate was live. And, reading through the lines in those FOMC minutes, it still is a possibility that Chair Powell could have been the deciding vote going for that major 50 basis point cut in the September meeting. But the market took that in stride, and those comments from Daly that she could maybe only see 1 more cut for the remainder of this year. And we saw 2-year yields continuing their track higher. They've now gone nearly 60 basis points higher since the end of September, still hovering above the 4% line on the 2-year yield. It's also causing a bit of jazz happening in the FX market. We are seeing the dollar on quite a tear, Tom. It has been up for the last 8 sessions in a row. This is its longest winning streak since 2022. You can see it's up over 2% on this winning streak. It's up again a little bit so far this morning.
The CPI print later today, Valerie, do we care less about it, given that we know that many of these FOMC officials are prioritising the labour market?
If you would have asked me that before the payroll, Tom, I said yes. The CPI definitely isn't as important as it used to be. But the Fed repricing that's gone on in the last week puts a bit more emphasis on today's print. We are expected to see the headline CPI number year on year tick down to 2.3%. And keep your eye on the CPI month on month print. That's going to be at 0.1, or the consensus at the moment is at 0.1. The risk to the upside of that, if we get closer to a 0.3 month on month, if you annualize that, that takes us farther away from the Fed's 2% target. But let's take a step back and look at how inflation has been falling in the recent months in my next GTV chart. If you annualize the month-on-month figures for the last 3 months, for the last 6 months, we are below the Fed's 2% target if we continue on that trend. The risk is, do we buck that trend very much like that payroll report bucked the trend of a weakening labor market just last week? In my next chart, I want to show you maybe a naive overlay chart, Tom, but this is the chart that's maybe haunting the Fed. Back in the 70s, we saw a dip in inflation only for it to reaccelerate later. Perhaps the Fed members are beginning to worry that we could have some sort of reacceleration in the coming year.
OK, Bloomberg's Valerie Teitel, thank you very much indeed. Yeah, the chant that haunts at least some policymakers. Valerie, thank you. As we lead up, of course, to the CPI print, the inflation print out of the US, 1:30 p.m. UK time. Here's what else to be thinking about today then. 7:30 a.m. UK time, the Riksbank governor will be speaking. We'll see if he says anything about the outlook when it comes to Sweden's, of course, rate policy apparatus and the thinking at that central bank. 12:30 p.m. UK time, meanwhile, it is the ECB meeting minutes. They are, of course, increasingly suggesting that this month is live for a potential 3rd cut from the European Central Bank. 1:30 p.m. meantime, it is that US inflation data expected again to build on the picture of a move towards that 2% target, as Valerie was outlining for us. That's at 1:30 p.m. UK time. We'll, of course, break that for you live and see how much sensitivity there is in the markets now to the inflation data of the US. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, go on the terminal. Cost cutting at HSBC, one of the top stories on that Daybreak page right now. The new CEO making a move at that bank. Coming up, the Spanish economy minister urges the EU to avoid a protectionist escalation with China. We're going to bring you more from that exclusive interview with Carlos Cuerpo. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Thursday, everyone. Now, Spanish Economy Minister Carlos Cuerpo has spoken exclusively with the one and only Bloomberg's Kriti Gupta in Madrid, where they discussed the country's budget and economy. Cuerpo also talked about sustainability and said their bet on renewables is paying off. Kriti joins me in the studio right now. So Spain has been a bit of the golden child. This has been a reversal, hasn't it, in recent years, where the periphery nations have been performing better than the core nations of France and Germany. Talk to us about what you've been hearing from the Finance Minister, how well positioned Spain is right now and how much tension there is around this budget.
Well, I think when you usually have conversations in the Spanish bond market, no one really pays that much attention to what the yields are doing. It's the idea they're on the periphery, they're traded high. No one really wants Spanish credit, except for right now, where they can't get enough of it. And you're seeing record bond auctions in Spain. You go over in Madrid, Tom, and all they're talking about is how Spanish yields are now lower than that of French yields. It's a major source of pride, national pride for Spanish investors, international investors as well, who've been quite bullish on Spain. But the reasoning is not the sunny beaches of Spain, which I really admittedly thought it was. It's a series of other factors as well. I asked the minister this very question. Take a listen to what he said about the sustainability of that outperformance.
Of course, the competitiveness of our firms, given the good track record in terms of energy costs, the Spanish solution, our bet for renewables is actually paying off as a competitiveness driver. But it's also the exports of non-tourism services, which is usually not put into the picture, but is equally important. Just two figures. We are exporting 90 billion euros in tourism services and 100 billion euros in non-tourism services. So they're growing even faster. And these are services of higher value added, like information, telecommunication, financial services. So again, these are elements pointing towards sustainability in our growth model, because and this is also an element I usually point out, it's a balanced one, because it's combined with moderation in inflation and also with fiscal responsibility.
Non-tourism services, 100 billion euros relative to tourism of just 90 billion. And this isn't something that's new necessarily, Tom. This is a pivot that Spain has made post-GFC, where they have actively invested in industry, but also financial services, pivoting to more external markets. And that's a marked change from the way Spain has operated from a more domestic, inward-looking country now to really focusing on what they can offer the rest of the world.
And it seems to be paying off. As you say, they're seeing that demand for their debt. The economy is performing better on many metrics versus their counterparts in France and Germany. So why the problems around the budget then? Why can't they just get this dusted off? They're in a relatively good position, get it squirreled away, sent to the EU, all done. But that's not happening.
It's not happening because, like many European governments, they can't seem to get a budget together. It's still a very fragmented domestic situation. And, of course, the Catalan situation plays a role into it in the Constitution. I'm not going to get into the nitty-gritty of the Spanish Constitution, as tempted as I am. But I think this is crucial because in Spain, you're seeing a real marriage of the two issues I think we're seeing in Europe, which is the budget situation in France, but also the EV hits that you're seeing in Germany as well. Remember, Spain is not only a major manufacturer of financial services and exports a lot of tourism, it also is the second largest auto-making industry in Europe. So a lot of the issues that are hitting Germany are also hitting Spain, except Spain's getting hit extra hard because off of those 45% tariffs on EVs, China has retaliated on pork, $1.5 billion worth of pork imported from Spain into China. So that's going to be crucial. But when it comes to the budget, there's a little bit of push and pull in terms of getting it in on time, matching that deadline. Take a listen to what he had to say on that.
So the Commission this year has said, listen, we do not want no policy change. We do not need no policy change documents. So we will give you a bit of flexibility. And actually, Commissioner Gentiloni said it with its limitations, but we will give you flexibility to make progress with your budgetary process at home.
Flexibility, but limited flexibility. And this is where France has really put everyone else in a pickle. The idea here is simply saying that we need an extension on our budget. And if France can do it, so can Spain, so can Italy. And that puts the EU's kind of fiscal input on delay.
OK, Kriti Gupta, thank you very much indeed with that exclusive interview with the Economy Minister of Spain. Coming up, Airbus deliveries fall as supply chain issues appear to persist for the plane maker. I'm going to bring you the details on Airbus next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Airbus deliveries fell 9% in September to 50 aircraft. compared with the same month last year. It comes as rival Boeing, of course, faces its own problems, including a strike by workers, which has shut large parts of its manufacturing. For more, I'm joined by Benny Kamel, who leads our global aviation coverage. Benny, this sector cannot catch a break. A 9% drop from this time last year for Airbus. They should be stealing a march on Boeing. What is going on?
Well, you're absolutely right. Good morning, Tom. And it's really a weak set of numbers across the board. If you look at what they announced yesterday, they managed to hand over 50 aircraft in total. That's below the long-term average that they've achieved over time, which is around sort of 55. And September should be a month where they do reasonably well, where they're coming out of their summer break. But it's just not feeding through. They have these persistent supply chain issues. There was a little bit of a warning for investors earlier in the week. There's a supplier called Senior. They had a fairly chunky profit warning and blamed it in no small part on what's going on at Airbus and at Boeing. So that gave people a bit of a head-up sort of warning that things weren't going that well. Again, if you dig into the numbers, low on the A320, very low on the A220, that's a slightly smaller aircraft. Even the wide bodies not doing that well. That leaves Airbus with about 270 aircraft to deliver towards the end of the year in the remaining 3 months. And, you don't have to be a mathematical genius to figure out that that's really going to be a very tight race to the finish line.
OK, so that 270 number is the target. But as you say, it looks like that's going to be a challenging target to hit, to say the least. On the supply chain issues, Benny, for Airbus, where do we stand on that in terms of the detail, in terms of how they're trying to address that? Do we have any sense of a time frame as to when these are ironed out for Airbus?
We really don't, and this is something that people are sort of starting to scratch their head over a little bit, wondering, look, at what point will the aviation industry finally manage to catch a break here? Other industries have managed to come out of this, and it's always sort of what you hear from Guillaume Faury, the CEO of Airbus, is, look, this is a very highly specialized industry, lots of very specialized parts that go into these aircraft, and we're talking really across the board. We're talking interiors, we're talking engine components, we're talking aeronautics, and in large parts, we're talking about big components. So particularly engine seems to be one of the pinch points here. So when that might ease is really unclear. We might see this going into next year. My colleague Kate Duffy, she was speaking to the IATA chairman Willie Walsh yesterday, and he said the deliveries and the lack thereof are feeding through to airlines at this point. Some of them have had to furlough some crew. So it's really across the board that you see this playing out.
And still a lack of clarity in terms of the timing on this. How does it leave that famous competition then between Airbus and Boeing? These numbers, how are the two airline makers squared up at this point, Benny?
Well, you would think that Airbus really can sort of steal a march on Boeing, given everything that's been going on at Boeing since the start of the year in particular. Now they have the strike. So really production at Boeing is closed down at the moment on the 737. That's the competing aircraft to Airbus's A320. But as we just discussed, Airbus is not able to capitalize on those woes in the way that they should. Boeing, they had their numbers a couple of days earlier. They delivered 33 aircraft, which is a bit of a surprise because, as I said, production is pretty much closed down, but they managed to eke out some of them that they had in storage or that they'd had cleared before production closed down in the middle of September. Right now, Boeing is in a very, very tough spot. They just suspended talks with the unions over the new labor agreement. When those will resume is unclear. But, at the moment, no production at Boeing whatsoever in terms of the cash cow 737. So really, both companies in very tough spots, but for somewhat different reasons.
OK, Bloomberg's global aviation editorial leader, Benedict Kamel, with the latest on Airbus, the numbers coming through and how that positions them versus Boeing, that, of course, faces its own challenges. Benny, thank you very much indeed. Coming up, Hurricane Milton makes landfall in Florida. We will bring you the latest on the storm's path of destruction. Millions of people, of course, have been told to evacuate. You are seeing live pictures of Tampa Bay, Florida right now as that hurricane hits. It's an evolving story. We bring you the latest. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Hurricane Milton makes landfall on Florida's west coast, bringing life-threatening storm surges and leaving millions without power. We bring you the latest throughout the morning. Asian equities rally following Wall Street's fresh record highs. US inflation data out later could define Fed policy in the coming months. Plus, split on rates. San Francisco Fed President Mary Daly expects one, possibly two more 25 basis point cuts this year. That's after Fed minutes reveal that Jerome Powell did face some pushback on last month's half-point cut. European markets futures are currently wavering around the unchanged line, maybe looking for the catalyst around inflation data out of the US later today, 1:30 p.m. UK time. And of course, in terms of the story stateside, a fresh record high on the S&P, the 44th of the year, driven higher by rallies coming through for some of the tech stocks. FTSE 100 currently pointing to gains of 0.2%. That's as you look at iron ore prices and copper jumping again in the session. It's been a strong session over in mainland China after the losses, substantial as they were yesterday, dropping the most in about 4 years yesterday, but regaining some of that today. The optimism percolating back into the Chinese markets. S&P futures currently flat, NASDAQ futures in similar territory. Let's flip the board and look cross-asset. There's a modest amount of money moving into US 10 years with yields down. They were down 1 basis points. Now they're flat and unchanged at 407. There could be, of course, some volatility around US Treasuries around that inflation print later today. Euro dollar at 109. Brent trading up 0.7%, $77.13 per barrel. Gold up 0.2%. Now, Hurricane Milton has made landfall as a Category 3 storm in Florida, where more than 2 million homes and businesses are now without power. For more on this, I'm joined by Bloomberg's weather reporter, Mary Hui. Mary, what kind of damage, then, are we seeing so far from this hurricane?
We're just seeing reports from local media as well as local authorities now that the damage is quite widespread, including in St. Petersburg, so near where Milton made landfall in Florida, of a sports stadium having its roof ripped off by the winds. This is where one of the Major League Baseball teams plays, and also where some hurricane response efforts were stationed. So that's happening. In addition, we're seeing how far the extent of the damage area Milton is causing. So as far down as Naples, so about 100 miles south of where Milton made landfall, there is major flooding reported by local authorities. So the damage area is quite large, and as Milton continues moving inland across Florida and out east, that damage will definitely extend most likely.
OK, so the damage is there, and that's despite the fact that this has been downgraded from Category 5 to Category 3. For the context, what does that mean in terms of the strength of this hurricane? Is there any relief at all from the fact that we've gone from Category 5 to Category 3? Is this a more benign storm?
No, the winds have slowed for various reasons. Often they do that as hurricanes make landfall. But at the same time, the rains, the storm surge, the flooding, all of that still comes even as the winds themselves have slowed down a little bit and weakened. So that's definitely something to look out for as we continue tracking the trajectory of Milton through the peninsula.
OK, Bloomberg's weather reporter Mary Hui with the latest on Hurricane Milton, of course, carving that dangerous and devastating path through much of Florida and the peninsula. As we speak, we'll keep you up to date on that story, of course, throughout this morning. Let's turn our focus now, though, to Germany, where the economy is heading for its second straight annual contraction. Second straight annual contraction. The government has revised down its output projection for 2024. It's the latest sign that Europe's biggest economy is struggling to shake off a prolonged period of weakness. Bloomberg's Oliver Crook is in Berlin. This in no way dovetails with your time in Berlin, in Germany, Ollie. There is no correlation here. Talk to us about the recovery being delayed again for Germany.
Yeah, Tom, listen, this was supposed to be the year of the bounce back. We were expecting to have growth of 0.3%, but then month after month, research house after research house started dropping their forecast into negative territory until ultimately the government had to do the same thing yesterday, saying that actually, in point of fact, this is an economy that will contract for yet another year. It will contract by 0.2%. And just for some context, Tom, that's only the second time that has happened. 2 years of sequential decline in the German economy since the Berlin Wall fell in 1989. So it really gives you an idea of kind of going against the macro trend in the German economy, which has really been one that has enjoyed a great deal of strength over the last 35 years. And for Olaf Scholz, there may be not a correlation to my arrival, but there's certainly a correlation to the coalition taking power in Germany here. This is just adding to the economic legacy of this government of being basically unable to revive this economy, in part because of all the external shocks. We, of course, had the invasion of Ukraine, which led to that energy crisis here in Germany. But there's also been a high level, Tom, of political dysfunction, a government that is really not able to get on the same page in terms of what reforms, deep reforms and strong reforms are needed to sort of bring this German economy back into life, and a sort of an economy that is in desperate need of that.
Ollie, are there any green shoots that you are seeing across this economy? Any reason to think that there's a silver lining, that things could bounce back? And if so, when?
Well, listen, Tom, if you believe the Robert Habeck, which is the economy minister here in Berlin and in Germany, he believes that the recovery is going to come next year. There's going to be growth of 1.1% next year and then 1.6% in 2026. When you ask him what are going to be the actual drivers of that, why do you have any reason to be optimistic? He says in part because there's going to be a recovery in consumer spending. Those wages have been coming up. Of course, the ECB diminishing rates is going to have an effect of stimulation. And then the last point, which is that basically a recovery in exports. But Tom, I'd like to take that last point and put a little bit of doubt there, because one thing we haven't talked about yet are these tariffs that have been imposed on these Chinese EVs. We have yet, Tom, to get the retaliation from China, and Germany is the biggest economy in terms of its exposure to the Chinese economy. If they decide to move big on that, that'll have a huge impact. And Tom, let's also not forget the other sort of unknown, which is there's an election happening in the United States, and there is a candidate there that has said that he will impose 10 to 20% tariffs on all imports into the United States. And the United States, as of this year, is Germany's biggest trading partner. So if that comes to pass, that means that German exports to the United States could diminish by 15%, Tom. And that's an economic shock that doesn't take very, very long to hit. That hits very deep and very hard. So still some clouds on the horizon for that optimism, despite the fact what we're hearing from the German economy ministry here in Berlin.
OK, excellent stuff. Bloomberg's Oliver Crook on the challenges facing Germany, a second straight year of contraction, at least no growth. Ollie, thank you. So from one economic shock to another of a very, very different form, of course, and that is what's unfolding right now on the peninsula in Florida, particularly around Tampa, where Hurricane Milton has made landfall. At this point, for more context and a different angle in this story, let's bring in our managing editor for ESG investing in the EMEA region, Tasneem Broga, with some details around the losses for category or catastrophe bonds. I'll get the words out eventually. Tasneem, thanks for joining us. The catastrophe bonds, investors get exposure to this with an understanding that, of course, they could end up losing their money if you face an event of this size and scale. There's a premium priced in for that. But the losses on this count could potentially keep some investors and shortchange them, maybe hit them unexpectedly. What are we seeing in terms of the catastrophe bonds and how that story is evolving on the back of Hurricane Milton?
Yeah, absolutely. So the scale of the losses that cat bond investors, they're also called cat bonds, by the way, are now facing depends on the level of economic devastation, obviously. If we take Hurricane Ian as a starting point, then we can get a sense of the parameters that we're looking at. So Ian, back in 2022, was a Category 4 hurricane. When it hit, it caused about $60 billion of insured losses. Now, back then, that triggered a 10% decline in the Swiss Re Cat Bond Index in September, which was when it happened. But overall, in 2022, cat bond investors only saw a 2% decline that year. Now, estimates for the kinds of losses that are going to stem from Milton have ranged from everywhere from 40 billion to as high as 150 billion. At the moment, it looks like the very worst case scenario may have been averted, but this is very hard to estimate at the moment. Basically, insurers and reinsurers are going to take the first losses, and then cat bond investors are facing a potential hit anywhere in the range from 2% to as high as 15%.
Gosh, up to 15%. Look, Tasneem, how is this market evolving, the cat bond market, to the fact that there is now a climate crisis, that these storms are becoming more frequent, they are becoming more dangerous and larger in scale? How is the market adjusting to that?
So, I mean, this is precisely the kind of event for which the cat bond market was created in the first place. These huge tail risk events that are far too big for the insurance and reinsurance industry to absorb. Interestingly, after Ian, after cat bond investors took a hit, they started demanding higher premiums in order to take on such risk. And then actually in 2023, that was a relatively calm hurricane season. So in 2023, investors had the benefit of higher returns without having to fork out meaningful payments. So last year actually ended up being a bumper year for the cat bond market with returns of around 80%. And that actually turned into, it ended up being the best insurance-linked securities, ended up being the best hedge fund strategy of them all last year. Now, with climate change, as you rightly mentioned, these extreme weather events are getting more frequent, more intense, more devastating, and importantly, just much more difficult to model because there's not enough accurate historical data that people can use on which to produce these models. So it is becoming a riskier business for the market.
OK, really fantastic context. Managing editor for ESG Investing in EMEA, Tasneem Broga, on those cat bonds, of course, as we look at the impact of Hurricane Milton as it makes landfall in Florida. Coming up, we're going to be speaking with the co-founder of tech startup Faculty and what she calls the paradox of AI investments. More on that's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Bloomberg understands that OpenAI chairman Brett Taylor's Sierra is in talks to secure new funding at a $4 billion plus valuation. The prospective deal underscoring sustained investor interest in AI, despite concerns about ballooning startup price tags and maybe a question mark over return on investment for some of this within the ecosystem. Sierra is an AI startup co-founded by Taylor. Meanwhile, with billions of dollars being invested in AI, including, of course, by big tech and the hyperscalers, there is growing concern about the lack of return on investment. It is something our next guest describes as something of an AI paradox. Joining me now, I'm very pleased to say, is the co-founder of UK-based company Faculty, Angie Ma. Angie, thanks for joining us. We want to get your views on this AI paradox. The money is clearly still flowing into your space, but it's worth reminding our viewers that you guys were at this from 2014, well before ChatGPT came on the stage towards the end of 2022. So you've been at this for a while, 2014. You're very much at the coalface of this AI evolution and how this story is unfolding. What does Faculty AI do? What is the value proposition for what you guys do?
Yes, well, it exists to solve this paradox that despite billions being poured into AI, but the value for enterprise remains low. And we're changing that. As Europe's leading applied AI specialist, we provide AI systems that helps organizations make better and faster decisions. And over the past decade, we have delivered some of the most nationally and internationally impactful AI solutions. Mm-hmm. We have a decade of thought leadership in AI and AI safety, including being the first to introduce President Biden to deepfakes. We're the reason that Theresa May, our Prime Minister, made technology company take down their terrorist propaganda within 2 hours, and we're the company that has helped save thousands of lives during COVID.
Gosh, OK, that's quite the pitch. Yes, you did have that government contract, didn't you, around COVID, and so there's maybe some efficacy there that came through in terms of the distribution of some of those COVID health requirements that were needed. Talk to us. It's a complicated environment if you're the CFO of an enterprise and you're looking at how you spend and integrate AI. The board is screaming at you to spend on this stuff. There's multiple different models you can choose from and then applications you can choose from. How do you work with enterprises to navigate that, and how much integration are you seeing right now?
Yes. So what it is really important is not thinking about what's the model, but rather what's the business problem. And first, what's the business problem? Then what's the technology? And what is the processes and the decisions that drive that business KPIs. And from there, you can figure out the technology, then the data, but everything flows from what's the business problem.
Do you have examples, concrete examples, of where you've been able to work with a company to integrate some of these solutions and actually provide efficiencies, actually close that gap on investment versus ROI?
Yes. So, for example, we work with large pharmaceutical organizations where we're helping them to make better decisions managing clinical trials. Clinical trials is notoriously unreliable. 80% of them have failed to recruit patients to the planned timeline. So what happens is that they're very expensive and they're costing millions per day. And so we implemented an AI that allows their decision makers to simulate and to scenario plan what are the interventions they need. Because currently, the trial managers act retrospectively. They wait for something to go wrong and then they intervene. But now they can actually, beforehand, before something goes wrong, they can intervene, saving a lot of money.
So is pharma, as a sector, an example of a sector that's on the front foot on this? And are there sectors that jump to mind and spring to mind that are still behind, that are still lagging on this in terms of the integration of some of these solutions?
Well, actually, if you look at the market, most organizations are what I would call at the lower end of the AI maturity, where they would be really sort of making one-off, short-term, non-strategic, disjointed AI procurements. So there remains a chasm between data and impact. And to really overcome that is to really thinking about how this business problem, and the better organizations, the ones that are of the more mature end, they have holistic AI system that connects across business and also have oversight and governance built in, ensuring AI safety and compliance.
Okay, so and the other part of what you do is that AI safety piece.
That's
and you've
right.
worked with the AI Institute here in the UK. You've had a contract with them. When you go and test some of these models, what are some of the risks that you're seeing?
Well, I think typically with a lot of the AI models, these frontier models, we don't understand them that well. So they could, for example, what we call hallucinate, so they can tell something that's not true. So, but then the key is looking at the circumstances where in our case is mostly critical, whether it's national security, where is safety, then to see what are the scenarios in which these risks become an issue.
When do you think we get human-level intelligence? It's the billion-dollar, trillion-dollar question, arguably, AGI. And is the labour market, are governments really prepared for human-level intelligence in terms of what it could do in terms of reshaping the labour market?
Yeah, so what we see is actually the key is actually do human-centric AI, because that's where you have human in the loop, human designing and trusted by human. And this is where human actually get augmented and be better and more effective at their work. Then that's where the productivity really comes into. Okay.
How are you doing on funding? Do you list in the UK at some point as an IPO on the horizon?
No, not yet, but you never know.
Okay, we'll come back to you on that one. Angie Ma, thank you very much indeed for joining us in the studio, walking through what you guys do, of course, and some of the changes that we're seeing, some of the risks and how to mitigate those. Faculty co-founder Angie Ma. Tomorrow, we're going to continue our focus on tech startups and speak with the chief executive of Luminance, which uses AI to automate legal documents. Another question mark about labour markets there, certainly when it comes to legal services. That's at 6:40 a.m. UK time. Now, some other stories making news this Thursday. Israeli Prime Minister Benjamin Netanyahu has spoken with President Biden for the first time in more than a month. Biden urged Netanyahu not to attack Iran's energy infrastructure or nuclear facilities. The US president affirmed Israel's right to protect its citizens from Hezbollah's missiles and rockets, while also stressing the need for a diplomatic solution in both Lebanon and Gaza. Bloomberg understands that Stellantis CEO Carlos Tavares is planning a deep management reshuffle in response to the automaker's disastrous profit warning. Tavares may present his proposal at a board of directors meeting in the US this week. The car maker is struggling with waning demand and high inventory. And HSBC is reportedly aiming to save as much as $300 million in a cost-cutting restructure. It will target some of its senior bankers. The Financial Times says HSBC is weighing merging its commercial unit with its global banking and markets unit. The report adds an announcement is expected by the end of October. There's plenty more coming up. We're going to build up, of course, the inflation prints out of the US and break that down for you with a preview. Stay with us. This is Bloomberg.
Getting the Fed in a position where they would consider hikes is going to be quite difficult. I think what's much more likely is we end up in a world where inflation remains sticky above target and the pace of easing slows down relative to what the market has priced in. But again, I think the opinions are so wide and so varied that we're once again going to see a market that responds aggressively.
Citadel Securities Global Head of Rates Trading, Michael DePass, speaking to Bloomberg's Sonali Basak there in terms of the inflation story. Here's how much work has been done in terms of repricing the Fed's next steps then. We had the FOMC minutes, of course, overnight. We know there was the debate about whether or not they should go on 50 or 25 at the September meeting. This is how it's evolved then. You've gone from around 80 basis points being priced in these markets for the month of November, the white line, and December, the blue line, all the way down to 25 and 21. So a combined about 47, 46, 47 or so being priced in. The last time I checked, it was actually down to 42 in terms of the market pricing. So that has adjusted lower in terms of how much is expected from the Fed by the end of the year. Let's flip the board and have a look at why some of that is. Inflation print later today. Here's the concerns. You reflect on what happened in the 1970s. That is the white line. You had the move lower in the 1970s in terms of inflation, back towards the target, and then look, it reached up again. That is a concern for policymakers. You get a resurgence in inflation, particularly when you look at things like the Middle East and reactions around the energy story if that conflict escalates further from here, with some seeing $100 barrel oil. That could have implications, of course, broadly for inflation. Let's really quickly reflect on that 44th record for the S&P. Here you are at 5,792. You've seen more analysts upgrading their views around the S&P, 44 record highs. That gives you the context going years back, but we are at a particularly a remarkable year, really. It's not a complete outlier, but it is pretty remarkable given all the challenges facing the global economy. Later today, talking of the global economy, the BOJ Deputy Governor will be speaking at a special event hosted by Bloomberg. Subscribers can stream the speech live on Bloomberg.com and live go on the terminal. And at 9 a.m. UK time, we're going to be speaking with Citi's Chief Executive in the UK, Tina Lee. The opening trade, though, is up next. Stay with us. This is Bloomberg.